There's your downside surprise, which, this is the number that is supposed to be better if it's lower. 202,000, down from 218. That was the prior number without revision. Continuing claims, 1,855,000, down from 1,875,000. So better news all around in the claims numbers. Now, I'm going to put in the standard economist disclaimer for this time of year that holidays distort the seasonal factors, and it can be difficult to get an accurate read on where we are. But in general, you're going to say, looking at these numbers, that not much has changed in the labor market. And again, I want to point out the survey week, the week that includes the 12th of December, the number was 1875, because that was last week for continuing claims. They're 2 weeks behind, and it was 206 for the headline number. So we are still seeing some enormous progress here. Last week's claims numbers were revised up to 220, which would have gotten your attention, John, I think, if that had been the case.
Exactly.
And instead, we lose 18,000 and goes to 202. But remember, we had New Year's Day, so maybe that...
To your point, it's early days. Does this lead to higher wage pressure?
Well, it depends on how you define hawkish. If you define it as the Fed doesn't cut interest rates as soon as people think, yes, it probably puts a little pressure in that area. We will not get another payrolls report before the next Fed meeting because it's January 31st. So this is what they're going to take into the meeting room. If you define it as will they raise rates, I still don't see that. But we'll see what happens maybe with that average hourly earnings and, of course, CPI next week.